probably about 3 or 4 months ago, actually, probably the beginning of the year, you and I were talking about the housing market. We were talking about mortgage rates, and we were both kind of like, you know what, if we get up to 6, we're in some trouble. And, we got there for a moment. I think in the middle of June, we were at 603 was the national average. And as expected, housing started to slow down, right? Didn't quite impact prices yet, but, given price inelasticity, that's kind of a longer run thing. But hey, the Fed's come out, raised Fed funds rate twice, 75 basis points. And of course, that means 30-year mortgages have to fall 1 full percentage point. Doesn't make sense to me, but they have. That's not supposed to happen. But hey, mortgage rates are no longer 6.03. I got notes over the weekend from several people going, I got a 4.99, I got a 4.97. So I got to ask, I don't think you or I saw this coming, right? A reversion back to 5%. But I guess this means housing's just going to take off again, right? Because rates are going down, housing's more affordable, and we're off to 20% increases again, right?
Well, not necessarily. So, the first thing is the Fed funds rate doesn't really have anything to do with mortgage rates. So the mortgage rates are loosely tied to the 10-year Treasury. And the reason rates have come down is because the 10-year Treasury yield is way down because of recession fears. So that is, big money, life insurance companies, investment funds, pension funds, sovereign wealth funds that are looking for yield, have a couple of places they can look with very little risk tolerance. So in this climate, when there's recession expectations and basically, all indicators are pointing towards a recession, big money is going to go to the safety trade, which is going to be bonds. And the yield curve is inverted because the 2-year Treasury now is giving a better yield than the 10-year Treasury. Typically, it's the other way around. Your longer duration bonds are going to give higher yields. But when there's recession fears and a flight to safety trade is on, you're going to see a lot of capital go into those short duration bonds, which jacks those yields up. But at the end of the day, what's happening is rates have come back down a little bit because of the 10-year Treasury. That's going to be short-lived. It'll end up going the other way once recession actually sets in and things change a little bit. So we'll see that change. But the question is it going to affect the housing market? There's always a move when rates come down, but the problem is they're still twice what they were. So housing is still limited in choice. It's still limited in terms of the pricing. We're seeing prices come down. We're seeing inventory levels go up. A lot of that's the summer. Housing market goes down in the summer anyway.
For sure, yeah.
So if it drops again and gets down into the low 4s, high 3s, then you will see a sustained spur of action and an increase in demand. But buyers are checked out, man. And you've got inflation that's really putting a lot of pressure on buyers.
Yeah.
So people right now are going, wait a minute, record high prices, inflation's out of control, recession's coming. Mortgage rates are still not great. They're still a lot higher than where they were. A lot of people are conditioned to think that it should be sub 3%.
Yeah.
Even if you and I
doesn't
know.
if it doesn't have a 3, I'm not playing, right? How many people told me that? I'm like, are you kidding me?
And you and I know. I mean,
these
4 or 5, even 6 is a great rate in general based on where we were back when we got in the game. So I don't think it's going to have a long-term impact. I don't think it's going to spur this all of a sudden, this huge spike in demand back to where we were, but it will increase a little bit of activity. But it's slow in the summer anyway. So any kind of activity is good right now for people.
Yeah, I sort of did the lead in kind of trying to be over the top. I think it will impact at the margin. I mean, a 1 point drops roughly 12%, right? You go from 6 to 5. It's not insignificant. We're not talking an eighth here. So it'll help with the margins. There will be some first-time buyers who got a no at 6 that get a yes at 5. So it's certainly helpful. I believe affordability is always the thing. So I think it helps at the margin. Like you, I currently don't believe this is a long-term thing. Might it last the month of August? Sure. But I think the chances that we're kind of here in October, November probably aren't great. Again, but I didn't see this coming. So again, my crystal ball is as broken as others. But yeah, I think housing goes off to the races if we do get back into 3s. And again, we're a long way from that. I don't see it. So I think
at least the demand off to the races. The question is, I mean, there's no sellers. A lot of people are pulling back. They're not putting them houses on the market because they know.
Yeah, they can't go anywhere. Yeah.
Yeah. They understand the values are correcting. They're hearing that over and over from realtors. They're seeing days on market go up. They're seeing huge price reductions. So the sellers that don't have to sell They're just holding back on listing right now. So inventory is still your biggest problem, which was created by this low, rate that we had over the last couple of years. It's really a weird time for the housing market. Very, very different than anything we've ever seen.
Yeah, and I think your statements, because again, at the end of the day, housing is a supply demand cycle. Demand's a two-step function. Demand is struggling, right? There's demand's two steps. I want to and I can. Right now, the I can was fixed with higher rates. That's Jerome Powell resetting housing, right? He can take rates, the front end, which impacts the 10-year impacts that. So we saw 18 million people estimated by Black Knight who could be approved at 3, not approved at 6. That's demand destruction. But what we are seeing now with all the negative headlines and two quarters of GDP and are we in a recession, not in a recession, whatever. Now you have people even stepping back from want to, right? People are re-signing their lease. They're like, I'll wait till, next year. I'm nervous about, when was the last time somebody said I'm nervous about my job, right? We had 3 years of just, jobs are plentiful. I can quit in a moment. But now people, at least where I live in tech land, people are actually talking about, I'm not sure, kind of nervous. So, they're not going to sign up for big mortgages, right? So demand is coming off. And then from sellers, we have all these people that, for whatever reason, either A, don't want to move or can't move because of interest rate. But we also have some people trying to time the market. Hey, let's sell now at the peak. We'll rent. We'll buy back later. What do you think of that?
There are a number of people that are doing that, and it's a little bit late because we've already come over the curve. Mm-hmm. So there are a few people behind the curve there and not going to get what they had hoped they could get or thought they could get. And back to the Fed, what they can do about housing. So they were still buying mortgage-backed securities, mortgage bonds up until, I don't know, last couple of months.
Yeah, I think it was June.
Doing that.
Yeah, they got
What's that?
I think it was June, but yeah, they got to stop.
So they have to stop doing that because that keeps pressure on the lending market. So if the Fed stops buying that, then you have to put those off on other investors. So that will increase the yield on those mortgage-backed securities and mortgage bonds. So there's some things the Fed can do. And they said they're watching the housing market, but they haven't really done anything to really affect it yet. And they can't affect mortgage rates. They can't do that because, again, while they can by rolling treasuries off the balance sheet. So if they start doing that, then that will definitely start to affect the rates of the 10-year, but they haven't really started doing that yet. They haven't started any QT at all. Really.
Yeah, very, very little. We'll see the numbers. They report QT twice a month on the 15th and the last day of the month. So we should see some numbers this week. It's going to be very tiny. It's just started. Yeah. So again, I think what we're both saying is, yes, rates are down. There may be some people at the sides, marginally impacted, a few more transactions, but we are not going, off to the races again. Is that fair?
Not right now. In the fall, once we get through August, we get into September, then we'll really start to see what the housing market's going to look like, because that's typically when people start to put houses on the market. That's when people are back in the market to buy. July, August is your 2 slowest months in the housing market in most areas. Mm-hmm. Everybody's on vacation. They're checked out. The thing you have now is with inflation affecting their discretionary spending, people are looking at, like, to your point, with a 1% drop in rates, it's still 2% higher than where it came from. So people are looking at that, even though they can afford it. The question is, do we want to take that risk when we've got inflation so far out of control that's not coming down? Mm-hmm. I know that maybe it's plateaued and gas came down a little bit, but that's the only thing. Nothing else has come down yet. Rent continues to go up. Mm-hmm. Everything else is continuing to go up. So the little bit of drop we've seen in fuel prices isn't going to offset inflation. So we're going to get another 9 handle probably in the next inflation print, because rent inflation is going to be in the next one. And that's going to offset anything else the only thing that's come down is gas, nothing else.
Yeah. Yeah. Another 9 would really, I think it's next week. I think it's on the 10th. I have to go back and check that. So, but before that, Greg, where can people find you?
Yeah, gregdickerson.com. That's where all my info is, YouTube channel links and podcasts. Go check it out.
Awesome. Thanks, bud.